New report saw signs of resilience from businesses run by women. We'll talk to one of the report's sponsors next. This is Bloomberg. PitchBook just released a report on women in venture capital, found that women founders have posted the second highest deal value figures on record despite volatility. Joining us now, Sarah Chen-Spellings, co-founder and managing partner of Beyond the Billion. Sarah, talk to us about the silver linings that you found for women-run businesses here.
Hi, Emily. So good to be here. Thanks so much for highlighting our report once again. You know, the data continues to tell the same story, and I think you've heard this narrative before, Emily, that female founders continue to outperform no matter what the circumstances, despite market conditions, despite their turbulence in the markets. They continue to be resilient, and yet they continue to be underinvested. So while we are seeing higher numbers compared to 2021 with deal value becoming a lot higher in the recent months, what's not sort of on the upward trajectory that we're really looking forward towards is the proportion of deal value and deal count as a whole compared to the whole venture capital. So really a lot to unpack here, you know, from exit value to their performance in general, from even looking at the burn rate of venture capital funding. And there's been a lot of news, as I think you've covered in your last couple of segments as well.
Right, you found that women founders had lower burn rates, greater valuation growth at the late stage versus companies founded by men year over year. What do you think's behind that?
Yeah, you know, this data, you know, people always ask us, are you surprised by the numbers? And the reality is we're not, because women continue to outperform in leaps and bounds. And the reason for that is this. Good news, bad news, they've not traditionally had a lot of funding, and they've had to work with what they had. And that means that they're a lot more resilient. They've planned their cash management, and they're able to weather the storm. And this, you know, guess what? It is a little bit of a funding winter, and the storm is here. And whilst, you know, there will be winners and losers, I think it's clear that women have been smart about planning forward, and their cash management is showing right now with the burn rates being a lot more manageable. And by the way, as you mentioned, you know, the drop in late stage funding in terms of median valuations that we saw, you know, the crash from the valuations from 2021, which was really, you know, a blockbuster year that we're starting to sort of see unravel now, was really showing how there were a lot of companies that had valuations that were not sustained. And with female founders, they're always a lot more, I wouldn't call it conservative, but they're a lot smarter, a lot more realistic about their projections and what they can do. And therefore, their valuations are sustained. That's sort of explaining the numbers of why the drop hasn't been as much as you've seen for the wider market.
I'm not going to argue with those adjectives, Sarah. Talk to us about the sectors that are seeing the most growth. You know, we were talking about health tech earlier, self-driving tech earlier, and the narrative is different for all of them.
Yeah, well, Emily, you know, the good news is that women continue to innovate in all sectors, right? So, of course, we see the data where there's a lot of growth in retail, in B2B SaaS. In fact, you know, some of the top unicorns that have female founders at the helm were women in health tech and women in SaaS as well. The two decacorns that emerged, so decacorns being, for those who may not be as familiar, multi-billion companies valued at $10 billion. And that's TalkDesk and Deal that really brought the valuation up and sort of the numbers and trends that we're seeing. So we're seeing a lot of growth in retail, in health tech, in fintech and SaaS. And we're excited by, as a whole, you know, for the work that we do with our consortium of funds, over 100 funds across the globe. Women continue to innovate across the sectors despite market conditions. Even if they're in a sector that's being hit hard right now with market conditions, they are pivoting and figuring out what next.
How are dynamics between LPs and GPs changing in this environment? There's a lot of money sitting on the sidelines that venture capitalists have raised. There's not necessarily a place to put it all.
Yeah, Emily, thanks for asking all of that. You know, the LP and GP sort of connection is one that we focus a lot on, right? And I think you've picked that up rightly, despite what has been said about the fundraising winter, it's clear that there is a dispersion, right? There are winners and there are losers, and there are those multi-billion firms that continue to raise billions of dollars. And, we've got a lot of dry powder sitting on the sidelines, but this is what's happening. LPs are being a lot more cautious, right? The word is we're optimistically cautious about the way forward. And therefore, despite money in the bank, a lot of them are being slow to deploy. So in fact, whilst you're seeing a lot of money being passed on to GPs, this doesn't necessarily pass on to the founders, which is where they're feeling the crunch a little bit. But, the winners will emerge. And I think it'll be more and more important to see founders really emerge in this crisis, right? I think a lot of the big names that you and I know, Uber, Airbnb, all emerged from a time of crisis. And I think this is going to be a good time for GPs that are focused on what next, the next generation companies, to really do the right thing. And LPs have a role to play here.
Beyond the Billions co-founder Sarah Chen-Spellings, thank you.